currency traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and this is the Currency Room. We are moving into the third week of October, so let's jump into it. In this session, we're going to be going over the previous week. We're going to take a look at the news that moved the week. Then we're going to go into the current market and say, okay, did we get a change in score? And we have had a couple changes in our overall market score over the past week. And of course, as always, we'll jump into each currency individually and give them a score as well. Once we have those scores, we're going to take the strongest, pair them up against the weakest, and look on charts and see if we can find any setups.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Let's talk about equities first. We did get a bear rally last week. We had 2 up days the week prior, and then we had a strong Monday, Tuesday, Wednesday, and then it turned over. But the markets were still up for the week. Let's talk about the bonds, because the bonds is the story. We've been talking about this. The bond market is driving everything. We ran all the way up to like 4.9 on a 10-year. Then we backed all the way down to 4.55. Then we ran up to 4.7. I'm telling you, the bond market is just leading the stock market around. Whatever it does, the stock market is doing. And the dollar, it just held strong. It had some pullbacks as well, but all those pullbacks were definitely bought. I think the market is preparing itself for higher yields and possible higher dollar as well. We didn't have a whole lot of news last week. We did have 2 inflation reports out of the US, and both of them were hotter than expected. On Wednesday, we got the PPI, hotter than expected. On Thursday, we got the CPI, a little bit hotter than expected. Now, the market took this in stride pretty well. And I want to pull up Thursday's chart. I thought Thursday was really the indication. I thought Thursday was really a strange day because we had a hotter than expected PPI report, and the market actually shrugged that off and went up on Wednesday. And then on Thursday, we had a hotter than expected CPI report, and guess what? The market was up for the first 2 hours of the day. And I was thinking, oh, they're going to shrug this news off, and then it plummeted. It absolutely plummeted on Thursday and had some follow through on Friday. The inflation in the US remains elevated, but it is definitely down off of last year's levels. So I don't think we're going to get much relief in the bond market and in the dollar because this inflation is sticking a little bit. Ankit, what was your thought about the inflation numbers this week out of the US?
If we take a look at the inflation numbers, everything is, pointing out to what the narrative is, that the inflation is sticky. So I think I was not surprised. We talked about it very extensively this summer that once we drop off those big numbers from last year, it's going to be hard to bring the inflation down unless something really changes. And I haven't really seen a big change there. So overall, I think the narrative hasn't changed. Everything is still the same. And here we are. The oil markets are rising amidst this Middle East conflict and everything. So all of this stuff still point out to the inflationary scene, and then the economy is still pretty strong. And it seems like this is the toughest market for the central banks to really break to change the things here. But so far, no change. So I'm not surprised. I think that probably still stays the narrative until something really changes fundamentally.
And I agree with you. I think the central bank is on a tightrope. They're walking it really nicely right here. I got to admit, I think they're doing it about right. The question is, can they actually thread the needle between taming inflation and not causing a recession? I don't know if it's ever been done before. If it has, it's not that often. It's called a soft landing in the world of trading. Right, so this is where we were last week. We had the Swiss franc as the strongest and the yen as the weakest, and everything else in the middle. This last week, we did have an up week in equities. You can see here, the U.S. market. Now, look, we have not closed for the day yet, so this number could change. I think we're going to close right around 43.35. We'll take a look at that here in just a second. But these are the numbers here with about an hour left to go in the market. Crypto did not have a good week this week. Check out gold and oil. Gold and oil have huge surges, most likely from the Middle East. I'm not going to dive into that, but there is some tension over in the Middle East. Let's take a look at the S&P. Like I said, we still have about 60, 70 minutes left before this chart closes. I think we close right at this line at 43.35. That's right where this line is. Here's why. A lot of times the market likes to frustrate people. And look, I know I'm talking like the market is a person and the market is making this decision. But look, it's just a big collection of everyone making decisions. And I always think, what's going to be the most disappointing end of the day? And the most disappointing end of the day would be to close literally right on this line and have long lower shadows that pierced below this line and then recovered. Pierced below this line and then recovered. Because I talked about this on Wednesday. If we break below this line and have a nasty red candle close, this was a bear rally. This was nothing more than a bear rally, and we need to go back to being risk off. And if you're in equities, you want to be short equities. We've talked about the seasonality between September 1st and October 15th. That is literally over. We talked about how this is the worst 6-week period in the markets. And after, we actually have a strong period. From October 15th to the end of the year is typically a strong period. If we hold this support here, if we hold above 43.35, I'm wondering if next week it gives people some hope. Maybe some of that new money comes in that's all based on seasonality patterns. I personally think we hold. But I said this on Wednesday, and I talked with our stock and options group on Thursday. I said, if we close significantly below 43.35, I am flat out wrong. Flat out wrong, and I have to change my outlook. The market right here, right now, is right in the middle of if it was today a good candle or was it a bad candle. We'll see where it closes, but I think right now all it leaves is it's a coin toss at this point. That's where I am, Ankit. What do you think? Is it a coin toss at this point, or are you more leaning to one side or the other?
No, I'm in the same camp here. I mean, this week is a good example. I mean, despite the conflicts that we're seeing and a big sort of a sell-off that we saw yesterday, market's done still well so far this week. I mean, these are the times just like what we saw in commodities. The gold market is up 5%. The oil market's up like 6, 7, 8%. I mean, that's what you see in a true risk-off fashion. The fact that the markets are holding in such a strong headwind, that's a good sign. That's a good sign. So I think once this blows over, then the focus kind of go back to the economy, the bond yields, and everything. So I think that's where the focus goes, and all those things are still holding in much better. So I personally don't see a change in the markets. I think the buying will still keep coming in as long as the economy is good. And so far, we have no indication for economy to not be so good. So I think as long as the optimism is there, the money will continue coming in. So again, just like now, once this blows over, I think we'll probably still find some opportunity to rally along with the seasonality pattern. I think that's where we are.
Thanks, Ankit. But looking at the currency market definitely showed a risk-off move this week. We had the Swiss franc as the best currency for the week, and you can see it performed really nicely. I also had the pound as a good currency on the week, and it did not perform all that well. So it was pretty clear about Tuesday, Wednesday, that the pound wasn't going to be the star that we thought, but that the Swiss franc was. But you can see Swiss franc, dollar, and yen were strong currencies, while Aussie, Kiwi, and the pound were weak. This is a risk-off sentiment in currencies. And then we come over here to crypto, and crypto was a risk-off week as well. As you can see, everything down across the board, 4 to 6%. We are definitely seeing, again, push and pull. We have good things and bad things. This is where we have to just say, let's look at the charts. Let's look at the charts. Where are we? Now, we have a scoring system. below the 20, below the 50, below the 2050 slope. As you can see here, we are at the 20. So we have moved from a -3 to a -2. So we definitely are not as bearish anymore. Earlier in the week, we were at a -1. So we went from a -3 to a -1 and then had to move it back down to a -2. All of this is still happening in the bearish area. But understand, when markets tip, markets go from like +2, then they go down to +1, and then they go to 0, and then that's how it moves. So if we do get a bottom, we will be moving back up this rate here. As I said, if the S&P has another red candle below that 43.35, we'll go back to -3. That's just what we do at Maverick. We follow the charts. Here's a chart on the bonds, the US bonds. You could see when it was up here, the markets were at its low. When they backed off, the markets had a rally. When they went back up, the markets suffered. Like I said, the bond market is really leading this market going forward. And let's check in on our crypto basket. Look, we said don't get overly excited for this little bit of bullishness. We said don't buy into it. The backdrop is not correct for crypto. It's just not correct. And sure enough, it fell apart. And you can see crypto is back in the doghouse. We didn't like it. We didn't even like it up here because, again, all of the things that we typically see with strong crypto, we're not there. Let's take a look at next week's schedule. I want to point out, again, the first one on Monday is the Kiwi CPI. That is definitely going to be moving the Kiwi. If you are trading Kiwi, make sure that you are tuned into this one. But I think the currency of the week is the Aussie. Take a look at the news on Aussie. We've got Monday, 8:30. We also have Tuesday, 6:35. We have the governor speak. And then Wednesday, we've got employment report. So again, 3 big things happening in Aussie. I think the Aussie is going to be a good trade, whether that's long or short. We'll take a look at the chart. Also, the pound is in play. On Tuesday, we get the claimant count change. We also get CPI on Wednesday and retail sales on Friday. I also think the pound is going to be a good trade. Again, the question is whether that is long or short. The other one I want to talk about is the Canadian CPI. If you're trading Canadian dollar, be looking for that on Tuesday. So this week, again, as I said earlier, it's a coin toss. I will know better in the week next week if 43.35 holds and we can start to build on that. The market may get a little momentum to the upside. If we fall below 43.35, I think we have another leg lower. Here's the thing. I think it's asymmetric risk here. I think if the markets go up, they go up 1%, 2%, 3%. I think if the markets go down, they go down 4%, 5%, 10%. So as you can see here, still more bearishness than bullishness. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? Right, now let's jump into each currency. Here's a great thing. Sometimes the broad markets are messy, but when you go into the individual currencies, it is crystal clear of what you should be doing in your trading. I'm going to go through crypto. Ankit will take you through Forex. Let's jump into Bitcoin. And I'm going to go quickly here because everything's at a 0. Look at that. Right between the moving averages and the momentum is to the downside. We come over here to Bitcoin Cash. It's also a 0 and momentum is 0. You can see I'm not too excited about crypto still. If you want to be excited about anything, Ethereum looks terrible. Ethereum has been the underperformer for a long time and it continues to underperform. It is looking really nasty here to -2. And we also have Litecoin starting to break down as well. If you do want to be short a crypto, I think you want to be short Ethereum more so than Litecoin. Right, Ankit, will you take us through Forex?
Absolutely. The best part, let's take a look at what the chart is telling us. So let's start with the US dollar. And this is, again, one of the charts that has been very stubborn as it wants to continue going higher. And you can see that we were at a point where we could have easily broken below the 20-day moving average. And that was really the deciding factor. I mean, we had seen the dollar underperforming for 4 or 5 days straight. And here we are with this risk-off event that we're seeing. Where's the money going? Money's going to the dollar, and then again, money's going to the Swiss franc. So here we are. Dollar is back to the previous high. So we are resuming the trend here. I think as we continue, chopping through this the news of how it unfolds overseas, I think the dollar will stay elevated. After that, we'll see where the trend goes. But so far, no indication whatsoever. Getting a nice high base pattern here on the velocity as well. So going into next week, back to bullish the dollar case.
Hey, Uncle, let me jump in here on dollar. Um, I do think the dollar is negatively correlated with the stock market, just like I think bonds are negatively correlated. If the stock market does rally next week, it's probably because bonds and the dollar are coming down. So I think if equities do strengthen, I know I'm not going to be looking for a dollar long. If equities weaken, I'm looking for dollar long all day long.
Absolutely, I do like that call there. And let's go to the yen. And I think this is something we've been talking about for the last few weeks, is that every time we talk about the dollar and then we go into the yen chart, we end up liking yen better on the short side. And I think that's what we are at. We have seen multiple times where yen will pop off on this, sort of events like this, because again, that's where the safe haven play comes in. But realize that all those bounces are just getting sold. So here we are getting a bounce. So once this negativity sort of blows over, I think the yen crosses are setting up again for a sort of a rollover effect as well. So again, going back to the whole thing, should we short the dollar or should we short the yen? I think I would rather take the yen as a bet over the dollar on the short side. But for now, we're seeing a bit of a risk-off event there. So we just continue to see that momentum going to the upside. So not ready to roll over yet. Now, Swiss franc is the biggest story, I would say, so far this week. And again, going back to the safe haven status. So going back just, a year or two ago, before Bank of Japan went so overly dovish in the monetary policy, every time we had a risk-off event, the yen used to shoot up first. And then we saw the dollar going up with it. Now, yen is no longer in that stage where, it's catching a little bit, but it's not in the same scenario. So where the money really flowed into, that was the Swiss franc. And you can see where Swiss franc went from a -1 to a +2. That's a big shift. So velocity is a +3. Now this thing has, rallied very nicely here. But I also think that this is also running on the safe haven narrative. So once that change, I think we'll have to uh, look at the Swiss franc the other way. But for now, the momentum is strong. It's a one-way trade, and we don't want to get behind, get in front of it until we see things sort of topping out. So pretty strong close in the Swiss franc this week. And talking about a contrast, take a look at the euro, and I think that's the biggest story. And when we look at the charts, I want to take a look at Euro Swiss franc chart. Now that's the story here because that's a big divergence in those two currencies. The euro didn't catch the bid; it's the Swiss franc. So we have seen Euro Swiss franc actually break to sort of last year lows. So that's a big break. So the euro is still kind of coming in the second. I think the euro and the Swiss franc is like the yen and the dollar. One definitely looks much better to play in one way than the other. So I think the Swiss franc looks much better here compared to the euro. Euro is still sideways on a currency basket. So let's focus on what's moving, and that's the Swiss franc. And then British pound, the third musketeer in this European currency. I mean, this thing is just going sideways. So I do not want to get so overly excited about the pound here. Remember, pound was one of the best currencies along with the Swiss franc, but the money's not really flowing into it. Next week, we'll see if there's inflation data or any of the other data points that we get next week moves the British pound, but this is still setting up like a little bear rally to me. We are not breaking lower yet because we have a support in place, but we are not really rallying higher either. So this is kind of right in the middle of the pack there. So I'm not really that interested unless we start to break the previous highs that we saw this week, if we start to break above that and start to aim towards that 50-day moving average, I think that's when I'll be more interested in buying the pound here. So that's my trigger on the upside if it breaks above that level. Now, let's go over some of the growth currencies, and starting with the CAD. I mean, CAD is another turning point this week as well. It went from, again, the 0 to a -1 to now a +1. So a big shift there. You can see how weak it was, and it rallied. So the question is that, can it continue to rally, next week as we continue to go through these events? I think that's something we got to wait and watch. We also have the CPI coming out next week as well. So let's put this Canadian dollar in a camp of could go either way. But so far, it's acting nicely here. Again, looking at the oil market, oil is up 7% this week. So that's, again, helping the Canadian dollar as well. So momentum-wise, everything is running. No signs of reversal yet. So I want to continue with that direction, which is to the upside. Now looking at the Aussie and the Kiwi, and I think that's really the big story or big turnaround, this week. The Aussie has been trading in this range bound for quite some time, and it has really chopped around, not giving us a good direction. And here we are breaking the support. So the question is that if it stays below that, can we look for more short than longs? And I think absolutely we can. Every time we have this long prolonged range bound price action, it's better to stick with the support resistance level. When we get an initial break and we continue moving in that direction, now that is where we go from a range bound to a direction trade. So Aussie, I think I like it further to the downside. And again, velocity and the trend score has now turned negative. Along with the Swiss franc, the big turning point this week was also the Kiwi. I mean, take a look at that. It went from a +2 now to a 0. So what really changed? Well, I think this was, again, one of the growth currencies that got hit the most, during this risk aversion market movement. So nothing really has changed materially or fundamentally. Again, that's the only change that I see. So right now, my outlook is now a lot in the right in the middle here. I'm not looking for a bullish case scenario in the Kiwi, but at the same time, if I want to go short, I'd rather go short the Aussie. That looks much better there.
Thanks, Ankit. And if we break this down to the overall trend, remember, trend score is a little longer term. Velocity score is like what's happening right now. So trend score, dollar, Swiss franc are the best trending currencies at the moment. If the equity markets continue to tumble, I like both of these currencies on the long side, dollar and Swiss franc against Aussie, number 1, and Kiwi, probably number 2. If the markets rally, like I said, I think it's a very easy call for if the markets fall, long dollar Swiss franc, short Aussie. If the markets rally, all of a sudden, dollar's going to likely fall. And Swiss franc as a currency of safety is probably going to have a little profit taking. The next one up on the list is CAD. And we talked about if the markets do rally, our favorite one is yen. So really, to me, I'm looking at two things. Risk on move, I'm looking at CAD yen. Risk off move, I'm looking at Aussie dollar and Aussie Swiss franc. Again, these are longer term things. Let's talk about what's happening right here, right now in momentum. Right now, the CAD's got a bunch of momentum. I love that. If we get a nice move early next week, I'm definitely looking at CAD yen on the long side. Here's the problem. Yen's also at a +2, so I need that to weaken a little bit. If the market falls next week, then you can see where all the pain is. Aussie and Kiwi go to the top of the list. So again, this velocity is kind of showing the same thing except for the yen. We need to see that yen back off a little bit, but everything else looks pretty well set up for the week. So let's go take a look at those pairs and look at some possible entry points. Let's first do risk on. So risk on, CAD yen is the pair here. Now you can see here, CAD yen, after having a big run up and then a huge fall, we bounce back, and you can see we've been really going sideways here for a while. Upper end of this range is right there at, 109.90, lower end of the range. So look, this is a high base. This is definitely a high base pattern. I need to see a breakout above this. So like I said, I need to see that yen back off. I can't get into this trade until that yen backs off. I'm looking at 109.90 as the possible entry point on a long CAD yen. This is assuming that the stock market is bullish next week and continues to have a nice week. That's really the only risk on play that I like at the moment. Risk off plays, I think, is pretty clear. Aussie dollar. Again, this is a 4-hour chart on Aussie dollar. And you can see we are right down at some key support levels. A breakdown below this point, to me, would be an entry. I would love to see a bounce. I would love to see a bounce up to, 63.20, where you could take a short on a bear rally, or a breakdown below 62.90 would be the area. 62.90 on a short. So Aussie dollar short. Then you could also take a look at Aussie Swiss franc on the short side. You can see this one is even weaker here. We just had a big, nasty red candle, so I would like to see either a base, like we saw here, or a bounce that I could sell into. So these are the pairs that I like. Again, CAD yen has some pretty clear price points. Aussie dollar has price points. Aussie Swiss franc, I'm waiting for a bounce here or a base before I can look at some price points. Okay, or is there anything you want to take a look at?
Yes, let's just start with the euro Swiss franc. I just want to highlight the big break that we've seen in the last 24 hours. As you can see that if you go back in time, I mean, the fact that it broke below that big support. The question is now, is the euro Swiss franc is ready to have another leg lower? So I think deciding between the euro and whenever these currencies diverge, it's very important to make sure that we are playing the right currency. So after a big break like this, I would the first thing I think we'll be watching out for next week is that it doesn't really bounce back in the range. If it stays below that range, I think I like Swiss franc long more than the euro. And in that case, I think it would be much easier to pick the currency pairs like euro against the dollar or euro against another currency that's doing well, comparing like the euro CAD. But I think this is a chart that we really need to pay close attention to because we don't get to see this big drops, big breaks. But when they do, it could be a shorter term move, or it could be something setting up for the next few weeks. So euro Swiss franc goes on the top of the list, and if the euro stays weak, euro dollar, Rob, if you want to pull up the chart on euro dollar, looks like a pretty good chart. I mean, all the dollar crosses, if we get a continuation, we on a daily chart, you can see that this is just a bear rally. We haven't really made a new high or new low. We're just pulling back there. So we're not ready to pull the trigger yet on any of these dollar crosses because we haven't really broken the lows yet. We need to see a break. The only pair right now, and Rob, you can quickly go through other dollar pairs, so like the Kiwi dollar or even the Aussie dollar. They're all kind of the same pattern. They're on the same pattern, but we don't want to pull the trigger until it really breaks. And take a look at Kiwi dollar. It's right there, but an Aussie dollar actually looks the best. So let's say over the weekend, some new developments comes or things get worse. I think dollar would be the right play to be, and breakdowns on those currency pairs would be good.
I agree that this week is going to be another great trading week. Now, last week I said that I thought last week would be an okay week. It ended up being a great week. We saw multiple 1% moves in currencies, which is always what we love to see. Going into this week, look, I have my opinion. My opinion is the market bounces. Guess what? My opinion has been wrong so many times over the last 26 years that take it for whatever. It's talking points. It's air coming out of my mouth. Regardless of my opinion, I have to go into this week assuming that the risk-off move is going to continue. Even though, like I said, I've got my opinion, we're closing on weakness. We're not closing on strength, we're closing on weakness. So I do have to go in thinking that dollar and Swiss franc are probably going to stay strong. Aussie Kiwi are probably going to continue to weaken. That's where I have to start the week off. If the market proves me wrong, or I guess if the market proves me right, because my opinion is we bounce and the market proves me right, then I can start to look for some different trades, but I can't start hoping that the market bounces until it actually does. And we'll know that next week. As always, focus on velocity, focus on the things that are moving. If things aren't moving, don't even look at them. remove them off your screen. Don't even waste your time on them. Everyone have a great weekend, and let's go grab some pips this week. Goodbye, everybody.